Hi, Tamal. Thanks for coming on the show again.
Thank you.
Let me start with this question. It was very interesting that you started with the analogy of waiting for Godot. But when it comes to mergers in India, the phrase that comes to my mind is once bitten, twice shy. Can you tell us about the history of mergers in India and how they've worked? Because you mentioned the ICICI and ICICI Bank merger in your article this week.
Yeah, let to cut a long story short. There are many mergers because in many cases, the Reserve Bank of India was a sort of what would I call an investment banker at the background. So whenever a bank was falling, RBI came to the rescue through the back door, asking someone else to pick it up. So that's the history of bank mergers. There are very few mergers actually where the two banks wanted to merge. For instance, the Kotak ING is one such case. But in most of the cases, RBI played the investment banker for the sake of financial sector stability. The ICICI, that's happened in 2003, and subsequently even IDBI. But that's a separate story because both ICICI and IDBI were development financial institutions. HDFC and HDFC merger is a separate story.
Now, coming back to that story, what has changed in terms of landscape and market requirements for HDFC to initiate this now?
Well, you said that I started with the waiting for Godot, Samuel Beckett, where Godot is an enigmatic figure. People keep on waiting. The two gentlemen, Didi and other person, waiting for it, and it never appeared. So typically, we all talk about something we expect to happen, and probably never happen. That's the waiting for Godot concept. Now here, if you see, for the past 20 years, there have been talks that HDFC and HDFC merger, because globally there are very few financial institutions, and India probably there's one HDFC, which is one product institution, only the mortgage. That's one part of it. And second part of it, you see the HFC stroke NBFC holding 21% in a bank. The bank in turn holding 100% in another NBFC, which HDFC does. It's a sort of bit of odd in the Indian financial architecture. So there have been discussion with Reserve Bank of India. I mean, I don't know whether it's official with HDFC that you need to do something about it. Now, one way of sorting this out, what could be going for a whole co structure. But then this has tax implications, and then valuation gets diluted. So the other option is the merger with HDFC Bank, which both Mr. Parekh and Keki Mistry, if you look at history for the past 20 years, have been saying, no, it doesn't make any sense because of the regulatory requirement, SLR and CRR. The large balance sheet HDFC has, if you factor in those kind of requirements, the cost is huge. So all along, the logic of not merger was this. But HDFC the bank was very keen that, look, I mean, we can't have a product basket where the mortgage does not exist. Which is why at 2003, they got into kind of arrangement where HDFC Bank started outsourcing the loan for HDFC. And for that, it was earning some fees, and it has the option of keeping part of it on its book. That was the kind of arrangement. And HDFC high manager, the senior management was all along saying, no, it's not the time. And suddenly, in the first week of April, I was in US. So I just heard that it got merged. And if you remember, just 10 days back, 10, 12 days back, I think 21st or 22nd March, HDFC announced that for the first time in its history, it had given, it had sanctioned 2 trillion. That look, the requirement has now come down. SLR is now 18%. CRR was 4% when it was announced. Now it has gone up to 4.5%. So the regulatory cost has come down. Of course, PSL is an issue, but there is a segment of HDFC's existing loan, which is a low-cost housing loan, can be considered as a priority sector lending. But still, there's a gap. But there are two things we need to you need to understand. We need to appreciate here. One is this merger is still 12 to 15 months away. So over that period of time, HDFC can, HDFC Bank can figure out how to sort this out, get more liquidity, so on and so forth. HDFC Bank, on the other hand, has enough liquidity, so to take care of that. And we heard Mr. Parekh saying that they have approached Reserve Bank of India for some kind of dispensation. Now, if the dispensation happens, then it's good. Then the merger will become value accretive, quote unquote, from the investor's point of view. Now, will Reserve Bank of India grant this dispensation? Historically, we have seen that it has not. Like in case of ICICI Bank, it did not. On day one, ICICI Bank had to fulfill all the requirement like SLR, CRR, and PSL. If I am not mistaken, they had to buy PSL, the private sector loan from State Bank of India. That is the arrangement is made. So in this case, I don't know whether Reserve Bank of India will be willing to make a change and grant them the dispensation of phasing out. If it does not, so in that case, the capital which could have been used for growth needs to be used to meet regulatory requirements. There is certain kind of loans which an HFC can have it on its books, but a bank cannot have it. Particularly the construction loan which have been used for the purpose of buying land, or the loan given against shares. So there are certain part of it which a bank cannot. So HDFC Bank will probably have to sell it off. Not probably, will have to sell it off. It cannot have it.
Okay.
But again, I am repeating, the merger is 12 to 15 months away. So in this 12 to 15 months, I think some of those kind of loans may be already paid and will go down. And similarly, the liquidity also they will probably manage in a better way, because there's a long rope given to them. There are various regulatory nods required. And for that, it will take, I think, earliest we can think of sometime probably September 2020.
This is very interesting because you just mentioned it about the regulatory requirements, capital requirements coming on par between NBFCs and banks. And you mentioned it in your article also, how things have changed since the past. Now, will we look at more mergers in the future given the scenario that is happening?
One of the reasons of why this merger is taking place, or they have opted for merger with Mr. Parekh gone on record, apart from the regulatory requirements coming down, which means the cost of merger coming down, also the arbitrage opportunities, the arbitraging between banks and NBFCs are going down, because the banks or NBFCs now virtually are being treated on a par. The asset classification norms, which was very different for NBFCs, now it's almost, it's like banks. A loan turns bad at certain period, both for banks as well as NBFCs. And another important thing, that the LCR, the liquidity requirement, also now NBFCs need to be liquid. It is given a roadmap, particularly in the scale-based approach, which RBI now has adopted. The larger NBFCs, HDFC is one of them. Okay, there is not much of difference between banks. Now, with that lead to more mergers? I am not very sure, but definitely more NBFCs will be now would like to become banks, because the advantage you have, the soft touch regulations, no more there. So why not become a bank and access cheaper liquidity in the form of deposits? So I think more than mergers, I would like to believe that more entities will knock at the Reserve Bank of India's door for bank licenses.
Got your point. Now, one concern that I have is the system creating too big to fail entities, which a crisis may at the end obliterate. Am I right in my assessment, or is that not the case?
No, it's not. Actually, if you see in this case, both HDFC among the NBFCs and HDFC Bank among the banks were already in that category. So it's not by merging them, you are not creating yet another institution which is too big to fail. Both of them in their own rights, going by their size, they were in that category among the NBFCs and the banks. And we need large banks. We need the scale. If you look at the global, the stacking order of banks, State Bank of India is the only bank which is among the top 50 banks.
Yes.
Among the top 10 banks, you'll feel the mostly representation from China. So we are not, even after this HDFC Bank, the new HDFC Bank post-merger will be roughly about double or little more than double or about double of ICICI Bank, but far, far smaller compared to State Bank of India.
Okay.
So we need larger bank. We need bigger bank, definitely. So I don't agree with you that we are creating a systemic, we will create a systemic crisis by creating more big institutions who are too big to fail. We need larger, we need more banks and we need larger banks, which is why also, if you have seen, Government of India has gone for consolidation within the public sector bank undertaking. Now we have 11 banks, and in some cases 2 banks, in some cases 3 banks, they have got merged to create the scale.
Got your point. That's about it. Thank you. Thanks a lot for your time this week, and we'll see you again next week. Thank you.
Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.